Ladies and gentlemen, the situations with the markets, with the economy, and the banks have never been worse than right now. And in today's video, I'm going to show you some shocking facts and shocking data that show that the banks are in trouble. And I've been told by many of my subscribers, I've seen many examples where customers that are trying to withdraw cash, they're now being targeted by the banks. I'm going to show you how the banks are preparing for mass defaults, mass bankruptcies, how banks' earnings are plummeting. And I'm also going to go over the laws that make it completely legal for the banks to take all your money. So everyone, this is a very important video. So let's not waste any time. Let's get straight into the news, the facts, and the data. So to start off, I just want you to imagine this. You wake up one morning, you pick up your phone to check your bank balance, and you look at your phone and see your bank balance has been completely wiped out. Your entire life savings have been wiped out overnight, but not because some fraudster has stolen it. The real reason it happened is because the banking institution, the banks they told us that were unquestionably strong, that were too big to fail, has finally faltered. What the bank has done has taken your deposit and converted it into shares to ensure its own survival. You now own those shares, but you've taken on more risk than you sign up for, and those shares could become completely worthless. Now, some people think this is fiction or I'm describing some economic nightmare, but no people, this has already happened before. It has happened in Europe, in Cyprus, and it's also happened before in history, just in a little bit of a different way. This is called a bank bail-in. Now, remember in 2008 where there was something called bank bailouts because these big, huge banking institutions were apparently too big to fail? Which is a lie, people. It's a lie these banks tell you, because of course if I run a pizza shop and my pizza shop is going to go out of business, I'm going to do everything I can. I'm going to say, listen, my pizza shop is too big to fail. If my pizza shop goes out of business, this whole town's business will falter. They aren't too big to fail, people. If a bank fails, someone else will come along, run the bank more efficient and take less risk, which is what these banks are definitely doing right now. Because listen to this, a bail-in helps a financial institution on the brink of failure by requiring the cancellation of debts owed to creditors and depositors. Bail-ins have been considered across the globe to help mitigate the burden on taxpayers as a result of bank bailouts. So this is completely ridiculous, people. There was a huge upheaval of using taxpayers' money to bail out these big, huge corporations and these banks. So the government says, you know what, we've got a great idea. Instead of using your tax money, we'll just use your money in your bank account instead. Problem, reaction, solution. Now again, this has already happened in Cyprus, but it did already happen in the US, just in a slightly different way. And the way they did this was with gold. And it was with Executive Order 6102, which required all persons to deliver on or before May 1, 1933, all but a small amount of gold coin, gold bullion, and gold certificates owned by them to the Federal Reserve in exchange for $20.69, equivalent to $433 in 2021. Now, what's something we learned from history, everyone? That's right, we don't learn from history. And it normally just takes about 80 years for people to completely forget what happened during the past generations. And while we may think 1933 was ancient history, it's not really when you think about it in the grand scheme of things of, thousands and thousands of years. It wasn't that long ago. And people didn't really have much cash back in those times. They held a lot of gold. That was really their safe haven asset back then. And what the US did said, hey, listen, you have to give us all your gold. And with conflicts only getting worse and worse in the world right now, who knows if an executive order could come again to take all people's cash out of the banks to fund whatever initiative the government needs to do or to save these too big to fail banks. Because the banks are going to be in serious trouble with the stock market crashing right now, with the bond market crashing right now, credit card debts at all-time highs, repos are starting in the car market, and a lot of cars are underwater in value. And what's really going to hurt the banks is when the housing market finally does start to crash. And people, it is going to happen. When the Federal Reserve likely to increase interest rates by at least another 1.5%, with the 2-year Treasury yield over 4% now, with mortgage rates getting close to 7% from what they were 2.75% in 2020, a big housing correction is just a mathematical certainty right now. But look at this, US bank profits to tumble on higher bad loan reserves. So if the banks are saying, don't worry, everything's fine, why are they all of a sudden starting to pile up cash to get ready for these mass defaults, mass bankruptcies that are going to be coming? Because what happened in 2020, 2021, people giving huge amounts of stimulus checks out. They're giving away the free money like Oprah Winfrey. And with inflation surging, there's no more free money coming. Listen to this. Analysts expect JP Morgan Chase & Co. will report a 25% drop in profit on Thursday, while Citigroup Inc. and Wells Fargo & Co. will show 38% and 42% profit declines respectively. These are no small drop in profits, people. These are huge drop in profits. And we're not even in a recession yet. Wait until they officially finally admit that we are in a recession. We all know that we are in a recession, but the government refuses to admit it. Maybe they'll admit it after November. But if we get 2 more negative quarters of GDP, guess what? We won't be in a recession. We will be in a depression. But you know what some new developments I've been hearing from some of my subscribers lately? My other friends I've been talking to is people like myself know that their money is not safe in the banks. And especially with the markets crashing right now, with the liquidity crisis likely to come around the corner, especially in the US Treasury market and mortgage-backed security market with the Federal Reserve no longer buying, they've been thinking, okay, I want to start withdrawing cash. Now, normally there's a limit how much you can withdraw per day. It can range anywhere between $5,000 and $10,000 with most banks. Now, what some people do to get around this is they may withdraw, for example, $3,000, $4,000 per day. So they don't hit this limit, and so, they don't get anything suspicious with the banks, or so they don't have to deal with the banks constantly asking, why are you taking this money out? Now, it's understandable why the banks have to ask this for the customer's safety, but some people appreciate their privacy, and they don't want to have to tell the banks a reason every single time they're withdrawing money. But what I've heard some banks are doing now is they're targeting customers trying to use this loophole. And I had a subscriber tell me he was withdrawing $3,000 every day, but then he got a notification from his bank to notify him that they now are limiting his withdrawals per month. Now the bank notified him he can only withdraw $5,000 per month unless he gives a good reason why he needs to take the money out. And you may think this is no big deal, people, but this has never happened before. We are losing our privacy more and more every single week. Things are getting tighter, more restrictive, and guess what? You know what the ultimate plan is? Eliminating cash altogether. We're seeing more businesses not wanting to accept cash, and we are seeing this huge push for this central bank digital currency. And if they usher in this central bank digital currency, well, you won't be able to get cash anymore altogether. And this is why I think the Federal Reserve and other central banks are scrambling so fast to bring this central bank digital currency by next year or 2024, because when we do have this huge financial crisis, well, guess what? The banks will be able to bail in those deposits and there'll be absolutely nothing you can do about it. Listen to this. The Great Recession that followed ushered in the term too big to fail. Regulators and politicians used it to describe the rationale for rescuing some of the country's largest financial institutions with taxpayer-funded bailouts. Heeding the public's displeasure over the use of their tax dollars in such a way, Congress passed the Dodd-Frank Wall Street Reform and Consumer Act in January 2010, which eliminated the option of bank bailouts but opened the door for bank bail-ins. So again, people, this is not just some crazy theory. This is all signed into law, and this is happening in every single major economy around the world. And there's been a big push from the Bank of International Settlements. That's like the central bank for the central banks. And remember, they're not a government institution, they're a private institution. The Bank of International Settlements has also spoken openly about how bail-ins can be used with a focus on integrations in the European Union. In these scenarios, bail-ins can be used in the cases wherein a full government bailout is unlikely. I think a government bailout is very unlikely because governments are swimming in debt right now. They simply don't have the funds to bail out these banks that have trillions and trillions of dollars in deposits. And they all say, well, look, we've got FDIC. Well, have you ever questioned how much FDIC actually has? Let's go have a look at their website. The DIF balance has risen every quarter since the end of 2009 and stood at a record $119.4 billion on March 31st, 2021, up from $110 billion at the end of 2019. The reserve ratio stood at, look at this, 1.25%. That's right, people. FDIC only has enough money to cover, guess what, how much deposits? Only 1.25%. Hello, that is nowhere near enough. And do you know the only thing that's holding up these banking institutions? Confidence. That's right. All it is confidence. If we had a bank run on one of these financial institutions and people couldn't get out their money and that fear spread, we would see a full-on banking crisis and the whole system would collapse within a few days. It's simply only this confidence that is holding up the house of cards. Because look at this chart. Look how much deposits there are in the US banking system. That's right, $18 trillion, and the FDIC is only insuring $119 billion. And when we look at all the data, all the research, when we look at cycles in history, we're leading up to the super cycle. A lot of the 7-year cycles are starting to overlap. A lot of the 80-year cycles are overlapping, the fourth turning, etc. There's a lot of speculation that something big could happen at the end of this month. But what is a matter of fact is that we did not recover from 2008. All governments did was print money. All they tried to do was throw money at it to cover the problem. But guess what? It only covered up the problem. The real problem is still rotting underneath. So people, don't wait for something to break in the financial system to act. It is time to act now to prepare yourself and to prepare your families. This is not financial advice, but just what I like to do is I like to have multiple bank accounts. So if something happens to one banking institution, even a blackout with that banking institution, at least I have other accounts there. And to go a step further, I like to have cold hard cash on hand, because if something happened with the power grid or something happened with all banks, they couldn't communicate with each other, at least I've got some cash to transact. And if I couldn't buy anything from the store, well, that's when you have to take things into your own hands and prepare even further by having extra food at home, extra water, extra daily essentials. So in the case, for whatever reason, you couldn't transact, couldn't get your money out of the bank account, you will still have items, you'll still be okay, and you don't have to go out there in the chaos. Because you know what happened if one of these big banking institutions went down and people couldn't get money out of their account and people couldn't buy things at the store? We would see absolute chaos. And the last thing you want to have to do is put yourself in danger and go into that chaos when there's chaos on the street with people hungry trying to get the essential items. So everyone, with everything that's happening in the markets with the financial institutions right now, I thought this was a good reminder for you to be prepared. What are you seeing? What's happening with your banks? Are you hearing any stories like this happening in your area? Let me know in the comments below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.